What's up, everybody? Good morning. Welcome to Trading Live with Bubba. And there was a little action today. I mean, not a lot, but there was a little bit of couple of bursts here and there. Still not really the activity that we're looking for to be active, but maybe we're getting closer to some action here. You saw a nice spike down in the NASDAQ early with an immediate bounce. And again, these are things that, this is the kind of action we're looking for. High volume, big movement in either direction. Again, right now, kind of quiet as we kind of figure out which way we're going to head from here. But at the end of the day, we'll look and see if we can, obviously find some trades. We found one the other day, and our trades for last week actually turned out making money. So that was pretty good as we look at the bigger picture. Again, it's still pretty quiet, so it's hard to get overly excited in the market here with the activity that we have. I think you just have to, again, this business is about the ability to be patient. You're getting a little bit of a solvent goal, but there's no action. So there's no panic. There's no fear in the trade. So, again, why should I get overly aggressive? So let's just take a look. I can see on my other side what's going on. So let's take a look at things in general. One of the things you may want to look at is a potential short in the euro currency on a longer term basis. Again, that's up to you, and that depends on your risk tolerance. But that's something that I would certainly look at. This is well overextended. It's 7 or 8 standard deviations away from the mean. You look at the bonds and the notes. They're to the downside, so they may be a potential buy. But in the actual stocks that we look at and overall, you saw we had a trade in Apple that popped. Here, there's nothing to do in here right now. We've got to just let it churn, and it's got to commit where we can get a higher probability trade. That's our whole business is about the probability. Let's just flip back here real quick, just in case. No, nothing going on, nothing worthwhile. So, but again, when you're looking at the market, you pick out your time frame. Now, this is a short week. You have Good Friday, so that's Easter. So it's a short week. So if we do something, we might do something for Thursday. We might do something for the following Friday. It just depends. But overall, Amazon, again, in the middle of nowhere, really, I'm not really ready to commit. I think one of the things you want to look at if you cover this is the 200-day moving average. I would think anything that would retrace back towards the 200-day move, most things are below. Okay. I would look to go and sell if we got back to the 200-day moving average. In fact, one that I'm sure many of you play around with, Bitcoin, held a 200-day moving average and is now charging higher. So I would look at Bitcoin or those types of stocks that are related that have the same pattern as a pullback to be a buyer. But many things like Apple, like Amazon, I'm looking to be a seller if it gets a rally. It does not mean I would not buy it if it got very oversold here. Okay. Coin, again, kind of in the middle of nowhere. And this in coin is well below the 200-day moving average. So even though it's correlated with Bitcoin, it is well below. So I would be looking to be a seller on a big rally. Right here, I have no trade to make. Crowd has made a little charge. Now, Crowd is one that I would now start to look at a potential sale, and not because it's negative, because certainly it's well above the 200-day moving average, but because now we're getting to that point of overbought. I don't think it's quite a trade yet because I'm not really happy with the overall action in the market, but that would be one I would be looking to sell call spreads in. And if I were going to make that trade, I would be selling call spreads for Thursday, for this Thursday coming up. Okay. Again, right now, we'll come back to it if there's something happen, but right now I'm not interested in doing much. Meta, nothing much going on. You can see it did get very oversold when we did buy it. And of course, it rallied right back up. Google, again, very little to do. And this is kind of consistent with what you're seeing after last Wednesday's monster rally. We've been relatively quiet, since that market. And again, that we need to be successful in short-term trading. You need to have bigger swings, bigger action, and more volume. We're really missing a lot of that. So we will just, again, I can just assume pass. Same thing in Microsoft again, but Microsoft, I do have a target to sell if it gets back to, in the mid 400s, low 400s. But for right now, I'm just going to sit back and watch it unless it gives me something else to do. MSTR continues to be in consolidation. It's a pretty wide pattern. I mean, it's $100 of consolidation. So you could certainly look at selling 340 and buying 240s if you want to trade that. But one of the problems I have with this one is that the implied volatility is so high, you're giving up too much of an advantage. Nugget, certainly we'd be looking to be a seller here. In fact, let's take a look at it now. I would sell spreads in this right now. Hold on. Let's just go back here. I got to get the right account so I don't get in trouble. All right, Nugget, and I would sell for this for the 17th, which again is Thursday. I would sell call spreads, and I think the 73.50, 75. And it's too short. There's not enough juice in there for me to really play this. I'm not risking that kind of money. I'm just going to pass it. I'm sorry. Again, I need to get, for that kind of trade, I need to get 60 or 70 cents credit. I'm not taking it at 30. I could go more at it if I wanted. Let's just take a look at if I want to go at 73. Let's see, 73. 73.74 is interesting. Okay. 73.74 is showing a credit. I don't know if we're going to get it, but I'm going to go ahead and work it. 73.74. I'm going to work it at 70 cents. Okay. I don't think I'm going to get it. Okay. I think that's a mispricing based on the wide bid offer spreads, but I'm going to go ahead and work it there and see what happens. Okay. I'll let you know if we get filled, or if you're working it with me, you'll know as well. Let's just take a peek back here, see if anything else is doing in this market. A little bit of sell-off in the euro currency, but again, not enough action. A little bit of a sell-off in gold, really not enough action. Again, our whole business depends on the speed of movement. Okay. And if there's no speed, it makes it much more of a challenge for us to want to get involved. It doesn't mean you can't make those trades. It's just that I'm not going to teach them to you. Okay. Because they're the trades that I would not make myself. So if I'm not willing to put my own money in it, why would I want to give you a trade to put your money in? I hope that makes sense to everybody. But every trade that I talk about with you here and every trade that I give you is one that I am making myself. NVIDIA got a nice bounce off the bottom. We're really just stuck in the mid-range. Again, the 200-day moving average is about 127. I'm certainly looking to get short there. Again, what I'm really looking for here is another kind of like a repeat of last Wednesday, a huge up move in which I would be selling with basically both hands, as we used to say on the trading floor. The Qs, again, we're right in the middle of nowhere. Once again, up around 490, though, I'd be looking to unload the boat. SMCI, really just stuck in consolidation, just really too much, not enough action, not enough to be able to make. XYZ, same thing. The SPY, the same thing. Again, this is unfortunately a lot of what you're seeing. There's a lot of markets that are just stuck in consolidation. We had the big move. You had the big explosion in volatility. And as I told you last week, this would come right back down. And here it is, straight back down. So now the good news is about the volatility is it's giving us some more. It's bringing down the cost of the option trades if we're trading options. The bad news is that it's taking away some of the action that we were watching. Okay. And then, of course, if we go back and look at Tesla, which I said was in the middle of nowhere, really not much to do. XBI, which finally worked. I lost the first week on it, came back on the second week. And Zoom, which is below. Zoom is, to me, a sale right here. In fact, I'm going to make this trade. And this is what we're looking for in other things. The 200-day moving average we're right at it. I would expect it to fail from there. So let's see what this looks like. And I'm going to do that for this week. Let's see, 73, 74. Oops, 73, 74. Yeah, I'm going to take this trade for a 44-cent credit. Okay, so neither trade is filled yet, but they are working, and maybe they'll fill before we get off air today. In the meantime, you've got the euro currency. Again, we're not getting the action. We need emotion from the other side. Remember, this business that you're in, this is a competitive business. You're competing against other traders. It is up to you to have the patience to be able to wait for it. Okay. It is up to you to be able to put yourself in the best position to wait. And again, right now, if you just look at this from a neutral standpoint without opinion, the Dow on a short-term basis is just in consolidation. The NASDAQ is just in consolidation. And you can see the similarity. They're all the same. Everything is consolidating right now, with the exception of the euro currencies breaking down a little bit. But again, what's my trade? Where do I get the action to want to make that trade? I think it's important to understand. Now, one of the trades that I told you I'd start talking about is I love using the underlying security or the underlying future. Okay, now, I have a current trade on right now. Okay, and it's called a ratio trade. Okay, and what we're basically doing is setting up a trade that is net neutral. Okay, with a slight lean. Your lean in any of these types of trades is always to the side of the underlying stock or the underlying future. It's much easier to do it in the futures market because the margins are so much less. But so I'm short 6 micro NASDAQ futures, and I sold those yesterday, and I will tell you exactly what price I sold them at. I sold them at 19077. Okay, I sold 6, which if you compare them to the option world or to the Qs, which is what I traded them against, okay, 6 micros equal 300 deltas when you're trading them against a security. Okay, when you're trading against itself, it would be less than 100 deltas. But again, you're not trading it yourself. You're trading it against the equity market. And in the equity market, I bought the 461 Q calls. Okay. And as we look at the trade right now, okay, on the NASDAQ futures, I'm plus $300. Okay. On the QQQ calls, I am losing 585. So it's pretty much of a small loser at the moment. The key to this trade is not what it does. It has to move, and it doesn't matter if it moves straight up. Then the delta on my calls will overcome my short delta on the future. If it breaks straight down, of course, I've got a target trying to buy my futures back at 18677, which would guarantee me, lock me in a profit of about $2,000, because then I would own the options for free, and I will have made enough on the futures to overcome the cost of the options in full. Okay, so I can actually, if I want to, hold the options for free for a couple of days. And my options expire in this trade. These options expire on Thursday. And if it doesn't come back and pay me off by Thursday, then I will roll the options forward to the next week. And then I'll rebalance what I'm trying to do. But this is, obviously, I'm not going to be able to teach it all in one session, but it's something to start looking at, okay, is being in a delta neutral position with an opportunity, knowing that if you get a big enough move in either direction, you're going to get paid. Okay. And that is something that we work on and look at, because a lot of the trades that I do with my Saturday call and in the option market in general are designed just that way. Delta neutralish to start with, that will gain value in either direction. The only time that I get hurt is when the markets consolidate. Okay. Now again, this is not what I'm worried about. I'm looking at more to daily. I expect to get some movement. And if we get movement, then I'll get paid. Okay. I had an opportunity, got very close overnight of getting the future off. We actually got down within about $50 or 50 points of the future of getting it off, which would have locked in the profit. I didn't. So now I'm here trading it. But again, I don't have to be real active. All I'm going to do is if we get a rally, I'll roll up my calls until Thursday. And then if I don't get out with a profit, then I'll roll the calls till next week. But I can hold this trade for as long as I want, as long as I have capital. So what you got to make sure is that you are not undercapitalized when you put this trade on, because you are paying approximately $1,100 per futures contract for margin, and you are paying for the options themselves. Okay. But again, you can hold on to this trade as long as you want. We have not closed a losing trade here, but we've had to hold a couple I had one gold trade that just closed out that we had to hold for 3 months. Okay. But we made money on it. Okay. And we were able to lock up a lot of profit and a lot of credit. And that's, again, the biggest thing I can teach you here is this is a capital business. You cannot be undercapitalized. Okay. And make these kind of trades. You can't say, well, this is going to be the winning trade right now. You have to assume that you're going to be wrong first. Okay. And then allow the market to work for you in your favor. Okay. But you know that your trade is neutral. You know your biggest risk, your biggest exposure comes down to lack of movement, because you get hurt on the premium. Now, last week, I couldn't put this trade on because the calls I paid $6 for the calls. The calls were $12 for the same exact calls. I can't give up that much risk, even though the market has an expectation of that much movement. We all have seen, or maybe you haven't seen, but a volatility crush. Okay. And if they crush the volatility, then I get hurt. And if I don't get enough movement, then I'm just paying into error. So you got to be very careful at how you pick these and where you pick these, because at the end of the day, that's what the business comes down to. Okay. Is understanding the volatility that you're using and understanding that the trade you're putting on, and recognizing when there's value and there's no value. And when volatility gets too high, it takes away from the value, because you've added an additional component of risk, which is the volatility, the crush. Okay. So again, right now you can see there's not much going on here to do. And there's not much I'd be looking at anywhere else at the moment. All I'm doing is sitting here watching the market, not do a lot. Okay. And I think that, at the end of the day, I think that you just have to be patient enough to wait for it, because if you're not patient, really all you're going to do is put yourself into trouble. Okay. And then of course you start making bad trades. You put yourself in more bad trades. So not much to do here. We'll see you back here on Thursday with another Trade Live with Bubba. And I hope you learned a little bit, and have a great week. We'll see you in a couple of days. Adios.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.